Good afternoon. How's everyone doing today? If you can hear me okay, you can see me all right, put it into the chat, let me know. Hi, Ferda. Hi, Isha. Hi, Masato. How are you doing? Great. Seems like you can hear me, so that's great. Hey, Jay, how are you doing? Hey, Trung. Hope you're well. How are you all doing today? If you can, let me know that you can hear me all right. And also, what I like to do is put it into the chat. Let me know where you're joining me from. Today, we're here with Vantage to get through the trade management part 104, entry, stop loss, take trading positions, take profit levels. All right. Istanbul, fantastic. Right, I'm in Singapore. So good thing, good stuff. Philippines. I'll give it a couple of minutes before we get started. So you're not going to miss out anything. Just let me know where you're joining me from. Hey, Claudia, how you doing? Hey, Anne. I see a Chinese name there. Sorry, don't know how to read it. It is 5 p.m. GMT plus 8 here. Tuesday, 5 p.m. GMT plus 8. Hey, Thomas, how you doing? Anne's in Kenya. Fantastic. Hey, we look at it. We're getting everyone from almost all around the world. We've got Philippines, we've got Istanbul, we've got Kenya, we've got Singapore here as well. Thomas is in Sweden. Good stuff, good stuff. All righty. So let's get started. All right, let's get started. We're here with Vantage on the trade management part 104, entry, stop loss, trading positions, trading profit, take profit levels. Just before I get started, right, just want to know, do you guys, what's your experience? What do you do with your stop loss levels? What do you do with your take profit levels? Do you trade based on a very strict risk to reward ratio, or do you apply a stop loss and take profit level just based on a fixed number, or based on where the chart price action is? Let's keep this a bit interactive, so let me know. Good stuff. All righty. Okay, so while you're typing that up, what we will be getting through today is really just showing you how to apply a proper stop loss, how to apply a proper take profit level, because what I found, through my experience with coaching a lot of retail traders, is that sometimes you do have good trades, you do have good trade entry levels, but the misconceptions about stop loss and take profit levels ends up putting your trade ends up getting stopped out or not hitting a take profit level before reversing against you, right? So it's actually, a lot of times people think about entry as the most important thing, right? You spend so much time thinking about a strategy, you spend so much time thinking about where to get into a trade, they forget about what to do after getting into a trade, how to manage the trade in terms of your stop loss, take profit levels. Okay, so we're going to spend a bit more time into not just the entry, but where to have your stop loss and take profits. As usual, before we start any webinar, this information, a quick disclaimer here, is this information, let me just move this aside. All right, this information here contained, expressed in the presentation on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. All right. So please remember that I won't be looking at charts at this point, but whatever you learn here, make sure you test it out. Make sure that it fits your trading strategy. Make sure you do your due diligence before you start deploying it on your trading through your trading journey. Okay. And also, as we get through all the different points through the session today, if you do have any questions, please feel free. Put it into the chat. Let me know straight away. Don't wait for me to ask, right? Because I might go on a couple of slides before I start asking if there's any questions. If you have any questions, put it in straight away, just so that I can address it immediately for you. All right. So you're not getting lost at any point. We can address your questions quite quickly. So a couple of things to get through today. The anatomy of a trade. Right, I was just giving you a bit of a brief overview of that. It's not just about entry, it's stop loss, take profit, where to put a break-even level, what to consider when you're in a trade, the problems with a fixed take profit. Okay, so a lot of times traders think that, okay, I'll enter a trade, I'll enter my take profit just based on a risk to reward ratio, or enter a trade just based on my take profit just based on a risk to reward, or I enter a take profit level just because I want to hit 50 pips or 100 pips or 200 pips. Okay. There are problems with deploying just a fixed take profit level. Okay. And also problems with deploying just a fixed stop loss. Okay. The stop loss level, what I consider it is that it's where, for me, I will look at it as where you are wrong, where your analysis is wrong. Okay, which is if it hits my stop loss, it's most likely going to continue shooting towards the upside or towards the downside. But what a lot of traders end up doing, deploying a stop loss is a pain level, right? It's like considering stop loss as a pain level, as saying, hey, if I enter this trade, the maximum amount of pain I can endure from this trade will be 20 pips, 10 pips, 15 pips, right? Or whatever the number is. When you consider it as a pain level, and then there's two small issues there. One is either that your trade might be too big, right? You might be entering too large size, or two is that, you might end up hitting your pain level before, and then after that, the trade starts going in your direction. Okay, so you don't want to apply a stop loss based on a pain level. Right? You don't want to apply it based on the pain level. You want to apply it based on where your analysis is wrong. Okay. And then ultimately, I'll show you how to deploy a dynamic stop loss and take profit level. Okay. So it's not just a fixed number. It's based on analysis, based on things on the chart, price action, just, where to put your stop loss and take profit. So Trung here places his stop loss and take profit based on price action. It's not, if you do it properly, I don't think it's very risky. It takes a lot of experience. Yeah, so you do need a bit of experience and discipline to master the stop loss. It is critically important to have a stop loss level. You do want to make sure that, I now show you there here, Trung, in the following slides later on how you can actually apply a stop loss. And if it does hit your stop loss, for me, I'm actually happy when a trade hits my stop loss. Okay, why I'm happy is because I know that it's not going to. So in this case, let's say we were looking to buy at this point, all right, anticipating for it to move towards upside. I have a stop loss there. And then I'll have a take profit towards the top. If price does go down and hit my stop loss, for me, what I'm actually happy is because I know that it is unlikely that it's going to trace back up. Right? If it does hit my stop loss, I know that price is more likely to continue heading towards the downside. So I've actually taken in relative terms, a small loss compared to what would have been a big painful loss if price keeps going further lower. Okay, so stop loss and take profit, again, highly, highly important. Just a quick introduction of the team here. Most of you know me already. My name here is Jindal, right? So I'm Jindal here. Most of you call me Jin, or most people call me Jin. One of the prop traders here at the Everest Fortune Group. So if you have any questions, please feel free to reach out and let me know. All right. So coming down to it, the first of the 4 points that we're going to cover today is what is the anatomy of a trade, right? Anatomy of a trade. Very commonly, what most traders think about is this 3 things here. All right. Entry, right? Where to get into a trade, right? When to enter a trade, whether to buy or to sell. Okay, now let me ask you this question. Before you enter a trade, is there only 2 decisions, to buy or to sell? Is there a third decision to make? Let's see if you guys can pick up on the third. Is there a third decision to make? Buy or sell? Or for those of you who have just joined us, welcome. All right, so if you have any questions, please feel free to let me know. All right, one person says no other decision, only to buy or sell. Anyone else? All right. Okay. So what I would also tell you, yes, good job, Claudio, right? I would say is to wait. Okay. So a lot of times retail traders or traders most, when you get caught up in the emotion of trading, when you start getting caught up into the price movements or no price movements, you're only thinking, can I buy or can I sell? All right. I can tell you that just before jumping onto this webinar, I actually was looking at a couple of trades and I was just thinking, hey, it looks like it could move. It looks like it could move. But one thing is, hey, I'm jumping into a webinar soon. And also that it might not, it might bounce a little bit before turning back down again and all of that. So another decision is also to wait. Okay, so that's the entry. You can buy, you can sell, or you can wait to buy or wait to sell, right? You don't want to just be there waiting. You want to wait for a particular action just so that you know what you're looking for. Okay, that's very important. A lot of times people just think about, I'll wait, but you don't know what you're waiting for. So you need to know whether you're waiting to buy if it hits a certain level, or if it breaks a certain level, or if you're looking to sell when it breaks a certain level. Okay, so that's the entry. These are the stop loss. These are the exit levels. Okay, these are the exit where you either exit based on a stop loss or you exit based on a take profit. Okay, you can also exit in between the stop loss and take profit level, but often traders, when they first get into trading, they always have a entry, stop loss, and take profit level. Okay, so basically the basic understanding of the anatomy of a trade is these 3 things: entry, stop loss, and take profit. Okay. So how do I know? So Trong has a question. How do I know when the signal or the idea is a fake one, that you should have waited later? I've gotten into these situations quite often. Hey, to know when it is, technically you'll never know when it's a fake one. All right. It's if we all know when it's a fake one, then we'll all just be entering trades that we're always going to make money. Okay, so you never know when it's really a fake one. Remember, trading is a probability game, right? I don't like saying game, but it's a probability scenario. You do enter a trade based your analysis, right? So you do analysis, you have your, for me, I do fundamentals. And then after that, I look at the charts in terms of my support resistance levels, in terms of Fibonacci levels, indicators giving me ideas, right? So I put that all together. And if I get a confluence, well, if I have many things telling me the same thing, then I would say, hey, I'm looking into getting that trade. I have my stop loss and take profit levels just to protect that trade in the scenario that if it's wrong, right? Not so much that it's fake, but if I, got it wrong, or if something happens, right? A surprise news event, or a surprise event happens, and then the trade moves against me. Okay, so you don't really know when it's fake. You do want to protect if you are wrong. All right. So anatomy of a trade, most commonly known of these 3. what you should also consider, and we'll get through this into the series later on, into the next few sessions, is these parts, this 4 here, when we start considering break-even levels, all right? So this one's here, break-even is where, your trade is running. Okay, so you might have bought at that point, and then it goes down against you. Your take profit was originally up there. You actually move your take profit down towards the entry level just to get to break even. Okay, because it's gone against you. You want that quick move back up, close out your trade at 0. You would have escaped relatively unscathed. So that's the break even. Partial profit is the second one where you're looking to buy if you were buying, and it does go up according to what you're planning to. You could close out a part of your trade, right, for the other part to continue running towards upside. Okay, so that's partial profit. Trailing stop, right? Trailing stop is not closing out half, but with your stop loss, it will move up as price moves up along with it, right? You have either an automatic trailing stop, moving as price move up, or you have a trailing stop based on support levels or fib levels, or even the PSAR, different indicators to give you a trailing stop. And then lastly, the idea invalidation, where you would have entered a trade and then, hey, it goes against you, where you want to close out your trade, to get out of that trade very quickly, right? Idea has been invalidated. So that's the anatomy of a trade. Commonly, only the 1, 2, 3 on the left here. Eventually, what will guide you through is the 1, 2, 3, 4 extra things to think about. All right, so today we're going to get through this first 3. And remember, we're talking about anatomy of a trade. Next one, we're talking about the problem with a fixed take profit level. All right, so far so good, everyone. I see a couple of you who have just joined us. This will be recorded, so it will be uploaded. You haven't missed too much anyways. If you do have any questions, please feel free to drop it into the chat. Let me know. I'll be happy to answer your questions. Right now, we're talking about the problem with a fixed take profit level. All right, a fixed take profit level. So how do you identify a take profit level? How I do it, or how I like you to think about it. Let me just go back to this other slide so I've got space. When you have a resistance level and a support level, okay, what you should be doing is remember that stop loss is always beyond, take profit is before. Okay, why we say that is because if you're looking to buy it up, your stop loss should be beyond the support level. Your take profit should be before the resistance level. Okay, if you're looking to sell it down, then your stop loss should be beyond the resistance level and your take profit before the support level. Okay, so that's how I would guide everyone. Just a simple rule: stop loss beyond, take profit before, just to guide you on the, that one line to guide your stop loss and take profit levels. But there are other things to consider. Let's say that if you had the idea that, hey, my take profit level, has to be based on a risk to reward, right? Or has to be a certain value amount or pip amount. Okay. And in this case, let's say that you have a fixed take profit of 100 pips. Okay, you have a fixed take profit of 100 pips. So what you'd have seen here is that price goes up, hits that resistance level, comes back down, goes up, hits that resistance level, comes back down again. So in this case, you would have seen that it's a clear resistance level here. That price has reacted off it twice. All right. Now, fast forward the whole thing to this point right now. You might have done your analysis. You would have looked at, price action or fib levels or news events coming out, and you're anticipating that price could move towards the upside. If you had a 100 pip take profit level, it would be right up there, right? It would be right up there. It would be beyond that resistance level. right? It'll be beyond that resistance level. So what do you anticipate would happen there? Think about a resistance level as a ceiling, right? You see price hit and turn back down, hit and turn back down. Having a take profit level beyond the resistance, what could happen or what's most likely going to happen is price is going to hit and turn back down again. Okay, so you always want your take profit before that resistance. So in the chart here, you can see that price actually did go up. You would have made almost 100 pips. You have come close to making the 100 pips. You would have hit or come close to that resistance area before turning back down again. Okay, so you don't want to start thinking, you don't want to start placing fixed numbers, right? Your profit target is up there. Price shoots up, miss by a couple of pips before reversing back down. And, as what happened here, a big reversal towards the downside. Once it hits a strong resistance level, we're likely to see it reverse quite strong back down again. So far, so good. All right. What you should be considering, right? What you should be considering is actually don't think too much about the fixed number, right? Don't think too much about a fixed number. So not so much about a fixed, whether it's based on your RR or whether it's based on a pip number, right? You want to consider what's your trading condition as well. What is your trading condition? Hey, if there is a resistance level over and over again, you want to make sure that you respect that resistance level first. So if you're looking to buy this at this point here, right, you would want your take profit to be before that resistance level. You do give away that 10 pips because now it's at 90 pips. You do give away that 10 pips of potential profit. But hey, at least you know that it's more likely to hit your take profit than to come close and then reverse back down again. Okay, so remember, the reminder here is don't blindly follow a fixed take profit just because, based on risk to reward or pip value or you read somewhere. Okay, look at the charts and adjust it. Okay, in this case, you could still have, let me just move back to the previous chart. You could still have a very good, this is probably a 1:3 risk to reward ratio. Okay, if you did just before that, you still have a 1:2 point something, 2.7, 2.8 risk to reward ratio towards the upside. So it's still a very good trade, just not that it's 100 pips. It's not 1:3. It's not that nice round numbers there. Okay, so don't start thinking about nice round numbers for your risk to reward or your take profit levels, because that sometimes is the thing that causes a lot of heartache. So far, so good. All right. So now that we've spoken about where an issue of having a fixed take profit level could be, what about a fixed stop loss? Right? What about a fixed stop loss? The problems with a fixed stop loss is that, again, very similar to the take profit example that I was showing you, right? You find a good support level here. Remember what I was telling you is that resistance, support, your stop loss is always beyond the support. Your take profit is before the resistance. Okay, so you always want to remember that. In this case, you find a nice support there in that green line, right? You would think that, okay, price has broken an interim level. We think that we want to move towards the upside. Okay, an interim level, you can see a bit of a level there, a bit of a level there. Okay, if you had a fixed stop loss of 100 pips in this case, again, the 100 pip number there, you're looking at a 1:1 risk to reward, right? Thinking it's going to move up, you want a stop loss down there, so 1:1 towards the upside. What happens? Right, eventually happens is that it comes down, it hits your stop loss, and then what happens? I'm sure you all have experienced this before, right? Price comes down, hits your stop loss, and then bounces back up again, right? It bounces back up. Sometimes it bounces all the way back up to where your take profit could have been or would have been. Then what happens? That happens the first time you go, oh, wait, that was, bad luck. The second time it happens, you say, well, some news event happened. The third time it happens, and following from the third time after that it happens, you're probably going to say that you're not going to apply a stop loss. I have seen a lot of people go through that scenario, Elias, so you're not alone. Don't worry too much, right? A lot of people have come to that scenario where they've hit that once, and then come down, hit again, and then come down, hit again. And then the third time or the fourth time they don't apply the stop loss, it goes down and then continues all the way down, and they've got a massive loss on their hands. All right. So couple of learning points here is one, always have your stop loss. Always, right? If this scenario here happens to you or happens to you quite a lot, it's not about not having a stop loss. It's about learning how to apply that stop loss properly. Okay. So you don't want to, again, coming back to the previous slide, is that you don't want to have your stop loss based on a fixed number, right? I can tell you that a stop loss based on a fixed number doesn't work because price doesn't know about your fixed number stop loss, right? Price knows about reactions to levels, just because everyone's reacting to the same level, and reactions based on momentum. Okay. So what you should be doing on the flip side is to actually consider, remember that I was telling you, your stop loss beyond the support level. Okay, beyond the support level, because if price can break this support, if it can break this support, then it's likely to continue all the way down. It's likely to continue all the way down. Make sense? And actually what I'll tell you here as well is as another example, right? Another example here is that you would have seen price climbing towards the upside. As it breaks that interim level, you might be looking to buy, or based on this example, you're looking to buy. I wouldn't even have my stop loss down there, right? I wouldn't even have my stop loss down there. My stop loss, let me just clear out this a bit. It just makes it a bit messy. Right? I wouldn't even have my stop loss down here. My stop loss for me would be below this interim level, about there. Right? I would have my stop loss there because I would have seen that when it broke up from this level, we've seen a big move towards that upside. Right? When you see it break up from this level, we see a big move towards upside. So once it broke above, I'm expecting it to move up. So my stop loss will be below or beyond that most recent support level or interim support level. Okay. So I would even go for a bit of a tighter stop loss instead of that 100 pips. You could have it even nearer. Just have that reason. Just remember that reason of your stop loss being beyond the support or beyond that resistance level. Make sense so far? Any questions at all, actually? Any questions? I see a lot of you have a couple of you again have just joined us. Welcome. If you have any questions, please let me know. Nothing so far. Let me just check. Okay. So nothing so far. Let me just go on again. Now we consider dynamic stop loss placements, right? Dynamic stop loss placements, like what we were just talking about, right? If you just had that level there. Okay, I'm just going to draw just based on this point here as a bit of a resistance level. You're looking to say, okay, can price come up, hit that level, hit this entry level and turn back down, right? So you're anticipating for that move to happen. Okay, so this is the entry level that you are considering. Stop loss is beyond the near-term resistance level. Take profit, you got a bit of a support there. So take profit is before that support level. Make sense? Yeah. Okay, I hope it makes sense to you. Does it make sense to you? Let me know. Put it into the chat as an example here. All right, fantastic. Thanks for that, Elias. All right, so how do you actually get a bit of a tighter stop loss? How do you actually consider whether your stop loss is going to be, don't like the word, but a little bit in terms of a bit more accurate? Okay, what you could consider is when you start looking at, we're looking at Fibonacci expansions and extensions here. If you start considering these points, you can see that it forms a level, not just, so we got a bit of a resistance there. Okay, but when you do a Fibonacci extension, you got a minus 27.2% and a 61.8% level, just slightly above your current stop loss level. Okay, slightly above your current stop loss level. So you're gonna start thinking, with that actually forms a bit of a resistance. So these levels here actually forms a bit of a resistance level as well. Okay, based on the Fibonacci levels, it forms a bit of a resistance level as well. So having your stop loss be just slightly beyond the Fibonacci resistance and slightly beyond that horizontal resistance level might not make too much sense. So what you should actually be considering is when you have your stop loss level there, you should actually move it beyond. Okay, so how I would look at it as is that, let me see if I can do this. No, I can't. Okay, is that when I have this level here, trying to draw a straight line as much as I can, and this level here, okay, these become the resistance area. This is the whole resistance area, and my stop loss is beyond that resistance. Okay, so like Trung and Elias was saying, you often get the scenario where it hits your stop loss. It hits your stop loss and then it bounces back into your favor, right? Could be either that your stop loss is a little bit too tight just based on the pain level, or it could very well be just that you did the right thing, or you did most of the right thing where you considered that resistance level. So you have your stop loss just beyond that. But, think about it with a bit more additional tools, is that when we look at the Fibonacci levels as well, then we form that whole area. And that's why you want your stop loss slightly beyond that to make a bit more sense. Okay, so how it actually plays out, this was one of the charts that we had. How it actually plays out is that it actually comes up, hits that resistance, right? So if I draw that again, right, it hits that resistance area. Think about it as hit the roof, failed to break above, and then it turns back down in, reversing that loss back into the entry level or back into profit level again. Okay, so very important to identify the horizontal support level, and also, it doesn't always have to be a Fib level, right? It doesn't always have to be a Fibonacci level. It can be other levels or areas that you want to pay attention to, and then you have your stop loss beyond those points. All right, so you can see that this would have saved you on your trade, because if you had it in the original point, you would have hit your stop loss and then after that turn back down. And I'm sure that's what most of you have experienced, hit your stop loss and turn back down. In the worst case scenario, or in the other scenario, is that it not only turns back down, it turns back down and goes all the way to where your take profit level would have been. Okay, so in terms of this, always remember, quick recap again. Think about that whole area, it tests your area. It comes very close to the stop loss before reversing back down again. Not just one price, not one level, but think of it as an area. Could be formed by a horizontal support or a fib level as well. Okay, and you can see that happen very nicely. Now, what about on the other scenario where we talk about a dynamic we talk about a dynamic take profit placement level. All right, a dynamic take profit placement level. In this case, we're saying that, hey, look, it has been dropping strongly towards the downside. It's bounced off a good support level, back up again. All right, back up again. Came very close to that point. Entry level, we're looking to say that if it bounces or tests that 87.625 level, we're looking to sell it back down. So we're looking for that move. Right, we're looking for that move with our stop loss above. You can see that it's got a horizontal level, it's got a bit of fib level there as well. Take profit towards the downside, towards that near-term support level. Right, so like I was just highlighting, you got your stop loss level there, makes sense. Take profit at the lowest swing level. Typically, you would say that it makes sense, and then your come up and test towards that entry level towards the downside. So what happens here in this case is that, remember, we were talking here about a dynamic take profit placement. Would this be the best place to have your take profit? Let me ask you guys this. All right. Would this here, point number one, be the best place to have a take profit? Elias, where would you have it? Would you have it higher or would you have it lower? H or L? Higher or lower? Thanks for that, Elias and Claudio. Yeah, you definitely have it higher. But then again, how much higher? Right? Because when I start telling people, you don't want to put it right at the bottom there because this is where the support is formed. You don't want to just have it right there. You want to have it higher. Then what a lot of traders will do is they go, oh, wait, we have to think about it higher. And then they go about that point there, right? They start looking at that level and start thinking higher as in that much higher. So it doesn't have to be that much higher. It just has to have a reason to how much higher or to which level. Okay. So how we do that reason or how we think about that reason is you have your Fibonacci levels here, testing. Okay. You have a take profit there. It doesn't really make sense because you're looking for that point there. Oops. Blocked out the number. Right. You would have your fib level there at that 78.6 level. You can use recent swing low candle. Yes, you can use okay, so just a quick reminder is that this is not the hard and fast rules. There are many tools and many concepts that you can deploy to help with your stop loss and take profit level placements. Okay, so just a quick reminder on that. But also, so in this example here, we're using the fib levels, right? Like Elias was saying that you could have it to your recent swing low candle, so close of the candle. So it would be about that same point here, right? So about that same point here. So you can see here, your fib level 78.6 forms beyond, just before that support level, right? I wouldn't call this a take profit. I'll call this a support level. So you think about it, most likely price is going to come down. Oops, hit this level and then bounce back up again. Okay, because there's a fib level there. I'm sure there are other fib levels in between, right? I'm sure there are other fib levels in between, but you can see that momentum of what happened here. So we're looking for that to continue on. So where we have it now, after that, following on from that is, instead of having your take profit right at that point, you should place it not at that 78.6, all right? Not at that 78.6, you actually want it before that 78.6 level. right? You actually want it before that 78.6 level, and that's where you have your take profit level there. Okay, so you see that we anticipate for price to come down to hit that take profit level. And possibly, if it does continue towards the downside, great. We could be looking for another trade to sell down. Or if it does hit and bounce, even better still. Okay, so in this example, what happened or what we saw happened was that it comes down, right? It trades lower. I'll show you here a couple of things to watch out for as well. Is that you can see we had a few levels right across. No, it's actually drawing the other chart. Right, you can see that we have a few levels right across. And that's also why we saw price come down, hit that level, bounce back up a little bit, test, bounce, and then we finally breaking those few levels to hit that take profit. Okay, so remember again that price doesn't always move. Well, price almost never moves in a straight line. Right, price almost never moves in a straight line. You do want to give it a little bit of a breathing space, right? You want to give it a bit of a breathing space. So you really don't want, in another example, is that you have your support levels there, your resistance level there, your support level there. You don't want to have the scenario where you'd have bought at some point, okay, and then just thinking that you want to keep stop loss very tight, right? Just thinking that you want to keep your stop loss very tight because you want a great risk to reward ratio. You buy and then you have your stop loss like 5 to 10 pips away, right? You have a very tight stop loss. What's most likely going to happen if you have a stop loss which is too tight is that it comes down, hits your stop loss, and goes back up. All right. So the scenario is that, I've seen a lot of traders try to keep a very tight stop loss, right? They try and keep a very tight stop loss. But what happens is that they lose 5 pips, 10 pips, 10 pips over and over again because they don't understand, or rather you need to understand that price moves in a zigzag. Even if it's going to come down overall, it moves in a zigzag before heading lower. So you don't want to come to a scenario where you're losing 10 over and over again, but you actually see price going to where you expected it to head towards. Okay. And then also for me, when I look at my take profit levels, right? I know that it's very often, you're looking to sell it down. You would think, okay, I want to have a near take profit because I want it to hit my take profit very quickly, and then I'll be out of a trade, right? Hit a take profit very quickly and then be out of a trade. I would say that always remember, put your take profit almost before that support level, just so that in the scenario that price suddenly shoots towards the downside, you would have maximized on your trade. All right, you have maximized on a trade. A lot of times, traders ask me, how do I maximize on a trade? You're going to have your take profit near to that or just before that support level. When you're considering also your fib levels, place it there just so that if it shoots down, random news, a big price movement shoots down, hits your take profit, you get to maximize on a trade rather than having a take profit that's too near. All right. Makes sense so far? All good? Any questions so far at this point? All right. If no questions, what I'll do next is also, you can see that this is super critically important, is that, if you had your take profit right at that point there, as we were talking about before, what would have happened is you would have seen price come down, come very close, right? And I've seen this happen a lot, price coming very close to a take profit. You're probably already anticipating that it's going to hit your take profit, and in the next moment it shoots back up, it tries one more time, Take that away. It shoots back up. It tries one more time to break lower. And then after that, it rockets all the way back up again, right, towards your stop loss. So what happens here is that what you'll be considering is that, hey, I've entered a trade, it could have made me very good profit, but it missed my take profit level just slightly before shooting up to very quickly towards the break-even level, the entry level, and then even faster than that towards my stop loss. So you've turned, in this case, I wouldn't say that you've lost, not just loss of that amount, right? This is a loss of capital, but I would say that you lost all that as a loss of negative potential as well. Potential, okay? So you want to consider your take profit levels, not just to the support level. You want to apply your fib levels. You want to start considering other key levels. And I like the concept of an area, right? So you don't want to just consider it as a one line as a support. You want to consider your support and resistance as an area. It does help a lot to prevent, the fake moves, right? The fake breakouts, or the early, avoiding this scenario here, okay, where it comes down very close to that support level before bouncing back up again. Okay, so many things to consider when you're looking at your take profit levels. Right, now let me ask you this question. Which do you rank higher? Right, which do you rank higher, stop loss or take profit? Rank higher as in the sense that which do you think is more important, the stop loss or the take profit level? Put it into the chat, let me know. Stop loss to you, stop loss, stop loss. Good, good. Okay. You can. Trung, you read my mind. You read my mind there. Well done. Okay. So that was actually a little bit of a trick question. It's actually, you do need to consider both. I would say that they're both equally important. Okay. Because yes, stop loss is there to protect your capital, right? Stop loss is there to protect your capital. But hey, we are trading, we're not just trading to protect capital, we're trading to protect capital and also to make money. That's also why take profit is important, because look here, if you didn't apply a good take profit, or if you didn't apply a take profit level, then a good trade would also have gone into negative, right? A good trade would have gone into negative as well. So that's why take profit is important. And also, I mean, your head stop loss is important, is critically important there as well, is because stop loss prevents that or minimizes that scenario where, if it shoots towards the downside, you would have a massive loss on your hands there. So, stop loss is important to protect against big losses, right? Take profit helps to increase, helps to increase the profit, not the loss. Okay. So both of it critically important, equally important in my from my point of view. All right, makes sense so far? Okay, so now let me ask you again, if you come to the point now, I mean, we've come to the end of the session, but would you be looking to deploy a bit more of a dynamic kind of stop loss, take profit levels, or would you actually start looking at adjusting your risk to reward ratios instead? Okay, so I have done this session, and when people start considering dynamic levels, they say, hey, I'm not going to do a dynamic level. I'd rather consider adjusting my stop loss, not being so adventurous on the stop loss levels, not thinking about the 1:3. I'll have a 1:1. Which do you think you would end up doing, and which do you think is more suitable? dynamic, or adjusting your risk to reward ratios a little bit lower, just so that you might think that's a bit more realistic there? Let me know, let me know. Okay. Or adjust my take profit stop loss after analysis as the trade continues. I hardly use the ratios nowadays. Dynamic, but it's harder to train, I guess. Okay. Two very good answers there. What I would also say is that, if you hardly use the ratios, you should use your risk to reward ratios. But what I would also consider in terms of the risk to reward is also in terms of probability, right? You want to know what your payout levels are, what your probability of success is on your trading strategy. So you do need data for that. Put it all together, you know that, hey, you're most likely at a 60, 70, 80% chance of winning a trade, right? Then you will be able to adjust your risk to reward levels accordingly. Let's say you have a risk to reward rate or a trading strategy which is 30 to 40% successful, then you would need a relatively high risk to reward ratio just to make sure that your trading results are going to be profitable in the long term. Okay, so that's one thing to consider when you're looking at risk to reward. The next one, when you're looking at dynamic, is that it is a little bit harder to train, but it's really just grasping that concept that, it's not just one level, right? You're not just looking at one price or one level. You do want to consider an area formed by whether it's a Fibonacci or different price levels, close of the body, right? Price action and momentum close of the body, Fibonacci levels, or near-term reactions forming that area, just so that you can put your take profit, beyond that support area or that resistance area, before that support area or before that resistance area, just so that, it helps your trade close out a little bit earlier. Okay. Last question here is that, do you actually, right? Are you more likely or less likely to leave your trade to hit stop loss or take profit, right? Or are you more likely to close it out before it hits your stop or your take? Very good, Trung. Use the range box more than line. Great. Okay. So are you more likely to close out your trade or leave your trade to hit the stop and the take? Or are you more likely to close a trade manually? Leave it to hit the take profit stop loss. And is there, do you think that there is a what's the word? A better way to do it? Do you think that, you should leave it to hit stop loss and take profit, or you should close out more manually? Great. Hey, Elias, I was just actually trying to get to that point, is that, you can, it all comes down to depending on how much time you have to trade. I know most of you are retail traders. So if you don't have that much time to sit there and watch the trade and see it bounce around and move around too much, then, leaving your stop loss and take profit, finding a good entry, stop loss and take profit levels in place does help you manage your emotions. So you avoid looking at, price bouncing around. It helps you manage your emotions. And then it also keeps, you might not have as much time to sit there and watch your trade. If you are doing the smaller time frame, the lower time frame kind of trading, which I think, Trung, you are, then it's quite likely that you're going to come to the scenario of closing your trades, more likely to close your trades manually. Okay, so for me, I'll leave it to hit my stop loss and take profit levels. When I do more swing trading kind of scenarios, my stop loss and take profit levels are still in place when I do scalping. but I do tend to close out my trade manually when I'm trading in the shorter or the lower time frames. All right. Okay, so as we come to the end of the session, we've gone through a lot of things, just even beyond what we had considered in the agenda, right? A few things to think about just to help you trigger that thought and to build that concept of your stop loss and take profit levels. Okay, if you do have any questions, please feel free to reach out. I'll be more than happy to guide you through with your trading journey. And if you have any questions about stop loss and take profits, reach out as well. Let me know. Okay. So with that said, if you have, let's see, get away. All right. So you do have any questions, let me know. And I'm not sure. I'm not sure who's going to be covering the rest of the series. I might be, or one of the other guys will do it. All right. Did you have a good session today? Let me know. Put it into the chat. If you had a good session, put it into the chat. All right. So with that said, Elias, reach out to me, drop me a message. We can talk about charts after that. But today is just about stop loss and take profits for now. Okay. I hope you trade well, trade safe, and I hope you had a great session. Thank you all so much. Take care now. Bye-bye.